optimism over the U.S.-China trade wars. Now, I know you guys are seeing a lot of news with Trump talking about, possibly going to war with Iran over the bombing of Saudi Arabia, and also the impeachment talk. None of that is actually really moving the markets, guys. That's just smoke. Okay, that is honestly just a lot of smoke. I mean, with the bombing, that had an effect on oil and it moved gold a little bit last week. But as far as the impeachment talk, guys, don't let that phase you in terms of how you move it in the market, because that's not really moving the market, guys. That is just smoke in front of the market. It's just a distraction to keep you guys away. So understand this: the mans are still supportive of this China trade war. All right, so it's pushing gold down. But how do we move forward with that? Well, the U.S. dollar was bullish this week. It was very bullish. The U.S. dollar opened up at 97. I believe it closed at 99. So it had a two week topper. That simply means that in the last 2 weeks, it's topped out where it normally would not have topped out at. I believe the last top out last week was at like 97.50. This week it's at 99. So that's going to naturally cause some downward pressure on gold. So what we have to look for right now is an imbalance in both of those. We have to see if the DXY or the dollar is going to go down, and we have to see where the pressure is going to come in terms of pushing it back up or pushing it down from the China trade war, and how that's going to affect gold. So if you guys are paying attention to gold this week, gold barely edged out on this last trading day, just under 1,500. That put it down at a 1 week low. So now we're at that 1,500 mark. We didn't want it to go below 1,500. So you couple that with the fact that we had a couple short selling trades that came in right at the 1,500 mark, that actually pushed it down. That triggered a sustainable break at the 1,500 mark. So what normally happens is that with my support and resistance, I don't really put support and resistance on my charts, but I put it in my mind. 1,500 was my sustainable break that I had on my charts. At 1,500, I did not want gold to break there. But what happened was that we had some institutional moves push gold down to 1,500, and once it pushed gold down to 1,500, we had a bunch of short sales that came in and pushed gold down to 1,493. So how do we look at that from a technical standpoint? Well, you look at your 50-day moving average, and for some of you guys that don't understand, I have a 50-day exponential moving average. Okay, that's just one of the moving averages that I use. I don't use it often, but when I have to use technical analysis, a 50-day moving average is definitely what you want to use. So gold tested that 50-day moving average for the first time since May of 2019. The average around that time was located right around 1493. And where did gold close out today? Right around that 1493 area, okay? So the daily chart, if you look at the daily chart on the 50-day moving average, it actually had a high established at about 1536, right? That was the average high on a 50-day moving average, was about 1536. So what we're looking for next week is we're looking for possible bearish reversals, and we're looking for confirmations around that, around 1483. So what's going to happen is right now, I think gold closed. Let me check my charts real quick. I think gold closed at about 14. Let's check. If you guys know where gold closed at, type it in the chat. I'm pulling it up on my phone. Gold closed today at about 1496. All right, gold closed today at 1496. So what we're looking at next week is we're looking for some bearish tests. We're looking for bearish tests right around 1493. If gold breaks 1493 this next week or during the open, we're looking for gold to drop down to 1483. Okay, around the 1483, 1484 area. If gold breaks 1493, you can look for a strong bearish move to go down to 1483. So guys, if it breaks that, we're looking for a short sell to 1484, 1483 area to be safe. Put it at 1485. If you want to let it ride to 1483, 84, somewhere around that area, go for it. But all the indicators are pretty much saying that it's going to roll over in the favor of the bears for next week. So just be on the lookout for gold to go down to 1484, 1485, 1486 area, all right, from the 1496 area. So you're looking at about 1,000 pips, about 100 pips or more if you play your cards right. All right, so all in all, the probability of gold breaching the 1493 area is going to challenge the lows, it's going to challenge some recent lows, and it's going to hit about 1483. So the probability of it hitting that area is going to be high. But what we're looking for is we're looking for a test of our old support area at 1483, and then we're looking for some bullish moves. And my guess is that gold is probably going to be bullish for the rest of the year. It's going to play out until about 1550 to maybe about 2000 until December. Keep in mind, guys, that the holiday season is upon us. The price of gold is going to spike. We are going to see a lot of movement in the market, moving toward November, December, then going into January. So just looking at the technical analysis side of it, we are going to be seeing gold be a lot more bullish after this run. And then once this China trade war is over, and once we get the smoke out of the way, we should be looking at a strong bullish move on gold. So that's my technical analysis. That's what I got from gold this week. And guys, I can't wait to get back to you next week and see where we are in the market, guys. So that's my take on the market. I'm going to talk to you guys a little bit more next week about UCAD. This week, I'm going to be looking at UCAD, EuroCAD. I may look at some GBP pairs. I don't really mess with a lot of GBP pairs, but I've been looking at GBP a lot this week. So we'll see what type of moves we got in the market this week. Bitcoin. Guys, I am definitely going to give you guys a technical analysis next week of Bitcoin because we did have a complete bloodbath when it came to Bitcoin this week. Bitcoin dropped from 10.1, I believe, to a low of 79.50. Somewhere around there. Bitcoin is right around 8,100 now. So we're looking for a rally on Bitcoin, and we're going to see if Bitcoin can push back up. Unfortunately, we got some federal involvement going on with Bitcoin, guys. And as you guys know, when the federal government gets involved, people start pulling their money away from altcoins such as Bitcoin and things like that. Let's see if we can get some offsetting movements and some other cryptocurrencies this week. Definitely want to see Bitcoin rally back up because, guys, I got some money wrapped up in Bitcoin and everybody knows we want to put that standard lot. We want to throw that Lambo lot on that Bitcoin and watch it jump up from 7,900 back up to about 10,000 so everybody can eat. So, yeah, guys, next week I'm going to give you guys a technical analysis of what I see happening in UCAD, Bitcoin, and a couple Euro pairs, GDP pairs. Guys, that's my time. Right now, I want to give it up to somebody I have a tremendous amount of respect for. He is my business partner, also one of my mentors, brought a lot of value to my life. He's going to bring a lot of value to you guys tonight on these charts. Make sure you guys drop whatever charts you want him to look at in that chat box. Guys, I'm going to bring up the guy, one of my mentors, guys. I love him. I call him the Rainmaker because he definitely makes it rain. CODI, are you on the line?
Yes, I am. Can you hear me?
All right, CODI, I can hear you loud and clear, bro. Take it away.
Right on, bro. I just want to give it back to T and Coop. These are two guys that have been in the game much longer than I have. I really look up to them when it comes to this stuff, whether it be just motivation, charting.
Wait a minute, CODI, can you hear me?
Yeah, I can hear you.
Man, we got to hear your chairman. We got to hear your chairman voice. Let me hear your chairman here real quick, man.
No. Everybody's sleeping in this house.
What's up, boy?
Oh, no. Everybody's sleeping in this house right now, so I ain't screaming at all. I ain't waking these kids up. No, I'm very excited, guys. Like I said, I got to give it back to T and Coop, you guys. T motivates me a lot. Coop motivates me a lot. If it wasn't for these two guys, I really don't know where I would be with my trading career. Because when I first started this, you guys, I felt alone out here in the Chicagoland area that nobody else out in the Chicagoland area was doing it with me, especially the south suburbs. So I finally, someone told me to try and find this guy that I saw before talking about trading, and through channels and just talking to God and putting it out there into existence, I finally caught up with them probably about 2 months after I joined IML, and they helped get my feet grounded more and rolling more and more motivation to help you guys, to help the lot as a whole in the Chicagoland area. There's not much leadership out here, but I'm telling you guys this right now, the major leadership is on this Zoom right now between myself, T, Coop, Devin, Marcus. You guys, we got a lot of leadership right here on this call and right in Trade Nation Chicago. Whether we all be a part of Trade Nation Chicago, New Age Wealth, Team Pips, Wolfpack, Gold, a team gold or whatever other team or what organization you guys are out there for. We're always just one big family trying to get the bag out here, trying to make that money. All right. So I only got 2 pairs that were dropped in the chat. Somebody said Euro USD, and somebody else said gold. So I only got those 2 charts pulled up right now, along with some schematics that we're gonna look over. All right, guys. I know we didn't do a Zoom last night, and that's I'm solely to blame for that. I set my alarm for the wrong 10 o'clock. I'm on a lovely iCrap phone, and I forgot I had it set to military time on this phone because my wife has my Android because hers decided to take a poop. So I quickly switched everything over for her. And when I set my alarm, I set it for 10 o'clock in the morning instead of 2200 last night. So that's my fault, guys. I'm going to briefly go over something really quick, which is going to be in relation to these charts. All right. I'm going to share my screen here. If you guys have anything that you guys want me to go over, please let me know. I will go over it to the best of my ability. By no means am I a master trader. I'm still a beginner in this. I'm still a novice, and I'll forever be a student when it comes to these charts. There's people that are way more intelligent than me, have way more experience, see these charts a completely different way. All right. That I follow, that they're my mentors, whether they've been doing it for 6 months, 6 years, 10 years, 20 years, I still follow them and everything because they're obviously at another level that I want to be at. So again, what we were going to talk about briefly last night is this right here, you guys, called the distribution, okay, of Wychoff Events. This is the distribution schematic when it comes to charting, all right? I know you guys probably see this a lot, right, because this looks like a range, right? This looks like consolidation. There's really no action. Yes, there's up and down movement, but it's moving sideways, right? And we're always told don't trade consolidation. Guys, there's ways to trade consolidation. There's ways to trade the markup, the markdown, the breakouts, everything, all right? Don't let people fill your head saying, oh, you can't trade the fake outs. You don't know when the fake out's going to happen. You don't know this. You don't know that. Because don't let people tell you what you don't know and what you should do. All right, we're all adults here. Figure it out. This was my biggest setback that I was having when I first started coming up in trading. Was people were saying, don't trade news, don't do this, don't do that. Why? And they couldn't give me an answer. All right. So eventually I finally figured out why, okay, why the markets move, how the markets move, okay? Now, yes, there is multiple ways to skin a cat. There's multiple ways to trade, multiple profitable ways to trade, all right? This way right here, I'm getting better at, I'm becoming more consistent with it, right, to where I'm consistently able to pull profit, all right? So distribution, okay? This here is your markup. Let me annotate here. Excuse my drawing, guys. It's probably going to be really crappy. Okay. So, do blue. All right. This is what's considered a markup. Okay. This whole area right here, that's markup. All right. So this doesn't mean it's an uptrend, right? Because we have a series of higher highs and higher lows. Higher highs, higher low. Higher high, higher low. Higher high, higher low. Higher high, right? I really wouldn't consider this a higher low because it kind of comes in even, right? It's about equal lows right here, okay? And then, so what this is called here is your preliminary supply, okay? This is where a lot of orders get unloaded at first, okay? And then you have your buying climax, where essentially that's the highest that they wanted to take the market, okay? Your automatic rally is just a test to see if there's any more demand that wants to get into this market, okay? Because you got to remember, supply and demand, this is essentially the demand zone, okay? Because supply is going to be down here where they're building supply. So they're letting off of their supply on the markup, okay? And now demand is up here. So now it's at a price that people aren't really buying at anymore, right? You see this here. This is where people are saying, I'm about done with buying this because now it's a little too expensive. All right, your automatic rally to test lower, kind of get those last minute FOMO traders in there, you know, your buyers in there, your what is this called? It's the 1 second, mouse. Your secondary test, right? So what that means, oh, hang on, I'm trying to get that back. Okay, so your secondary test there, guys, that is, where is my little thingamabobber? What happened to it? Where's my, maybe it's this, okay. Your secondary test here, guys, that's them testing again the high, okay? They're testing this high, okay? Let me erase some of this. Clear all drawings, okay? So we have our markup, right? Trying to test to see if they still want to buy this, okay? Your FOMO buyers, okay? They're testing this, is testing that high right there, all right? This is testing the low, okay? This is your up thrust, okay? So what this is doing, right? This kind of looks like your head and shoulders, right? Shoulder, head, shoulder, right? For the drop, okay? For the drop, your inverted head and shoulders, okay? See how these patterns are in here? The market makers paint these to capture you guys, okay? They paint these to capture you guys, all right? So your up thrust is essentially breaking this high because they know that people sold it here because it created a double top. Okay, it created that M. All right, created that double top. They know that we're greedy, that we're not going to put our stop loss in profit, that we're not going to take profit. Okay. Can everybody else still hear me pretty good? I know Mr. P and PJ says that his signal keeps fading.
Yeah, you good, Cody. We can hear you.
All right, perfect. All right, guys. So your up thrust is what it's doing is because they know that this was the first high, okay? This was the second. What does that mean? Double top, your M pattern, right? Fuck this up and down shit right here. Just look at this. This is up, down, right? That's your M. Here, I'll do it again. Up, down, okay? You're expecting it to retrace all the way down here. Okay, how do I know that? Cody, how do you know that? Because, guys, I used to trade that way. Okay, I used to trade that way. I used to sell the second touch for the M. Okay, banks know this. They paint this for a reason. All right, so your up thrust, okay, is going up, taking your stops out because your stops are more than likely 20 to 30 pips above the high. Okay, they're taking your stops out to move the market lower, all right? Oh, but that didn't work because they didn't get the volume. Here's your inverted head and shoulders again, all right? But it failed. You probably got stopped out, okay? So here we go again. They want to test it, right? They're testing you guys, right? This is all an emotional game, okay? All emotions. Excuse me. All right? So they know people are buying this low. Why? Why? Because of the W that just formed right here. Okay? They know people are buying this here. Okay? They know they are. All right? So you got your W, your M, okay, that are mixed in with each other. All right? What else is above here? You have buy stop traders. All right? If you guys read the book Naked Forex, which I'm not saying go read it, but you can if you want to. If you read the book Naked Forex, it tells you to enter buy stops and sell stops above the highs and the lows. The banks know this, okay? And it tells you to put your stop loss like in the middle or at the low or the high or whatever, okay? The banks know this, all right? This is why people continually get stopped out. I thought Naked Forex was the Bible to trading until I figured out, oh shit, the banks obviously read that book too. Okay? Banks obviously read that book too. All right? So this is your up thrust after distribution, okay? So that means all of this right here, they're distributing, okay? Their banks are pulling their profits, right? They're loading up for the drop, okay? They're loading up for the drop. There's ways to see this in the market, guys, without drawing these lines, just by looking at the candlesticks or the line chart, however you want to do it, all right? Guys cannot be anal when it comes to this type of setups, okay? It's not always going to be picture perfect like this, right? It's not always going to be picture perfect like this one, or I think the schematic 2 is on here, or this one, okay? You may not get that up thrust after distribution. It may just last point of support and drop, okay? Last point of support and drop. I think that's what that's called. Yeah, last point of supply, okay? Last point of supply, last point of supply, drop, okay? Your SOW is a sign of weakness, okay? Because it's showing that it's ready, okay? It might be ready here. Maybe it was low volume, okay? Volume has a lot to play with this. I'm studying volume right now, actually, on top of getting better with Wychoff, okay? All right. So your up thrust after distribution, okay? It tests this high and this high, okay? Because again, they know people have sells here with stop losses up here, okay? And buy stops up here. So they want to grab that because the bank needs money to move the market. They're not going to use their money. They're going to use our money, or at least they're going to try to use our money, okay? So they do this, they test it, drop it, come back up, all right? There's usually a buy or a buy to sell candle right here that makes this, okay? This test here is testing that. This test here is testing the buy to sell that's right here, okay? So that's 1, 2, 3 different entries you can get before the drop, all right? 3 different entries before you can get before the drop. Last point of support, okay? Right there. Again, this is testing that buy to sell, all right? There's usually a buy to sell in here somewhere, okay? Usually when it's a drop like this, it's a drop with a small buy and then a drop, okay? And that's what this is testing, all right? And this right here, guys, is on every time frame. Every time frame. There's this one and this one, okay? Every time frame. There's accumulation and distribution on every time frame. You just have to know what the higher time frames are doing so you know how to read this, okay? It's not rocket science, you guys. It's really not that hard once you understand it. It seems like it, but it's not. All right. Obviously, there's the different phases. You know, we can get deeper into that once we start understanding it a little bit more. All right. So now that we have that, okay, here we are on gold. All right. I'm going to start on the day. All right. Let's zoom in. Okay. So we had an uptrend here, right? Because we had a series of higher highs, higher low, higher high, higher low, higher high, higher low. Okay. Higher high, higher low. Okay. Higher high. And now we have a low, but it broke our previous low. What seems to be going on here, guys? What seems to be going on here? I hate that that's showing that. What color can I change this to? Will black work? Yes, black will work. Perfect. Okay. So, it broke this low. Okay, it broke this low essentially. We have a ton, all right? So now we're about to get a little bit deeper into this, all right? So now we have to look for where money is, right? Where is the liquidity sitting in the market? Now, again, guys, I am still learning this. So by no means, you know, am I a master at this? I'm still learning myself, all right? So let's do this, okay? To look for liquidity, we have to look for equal lows and equal highs, all right? Oop, I don't want to invite anybody. All right. So we have to look for liquidity, guys. Liquidity means money. All right. Liquidity is money. Liquidity equals money. Okay. Which means, all right, which means stop losses and sell stops. All right. So by what I mean by money, okay, money is stop losses, pending orders, okay, active orders, okay, take profit, okay. That's what I mean by money, okay. That's what I mean by money. All right. Let me fix this here. Do that better. Much better. Okay. Liquidity equals money. All right. Which means where is that building up at? Okay. Where are stop losses being built? Where are pending orders being built? Where are active orders currently built? Where are take profits currently built? All right. That's all liquidity. There's ways to find that liquidity in the market. All right. Now, the way we find that, okay, is looking for relative equal lows. They have to be either equal lows or close to equal lows. Okay, close enough to be an equal lows. All right. So 1 we have here. Okay, equal lows, right? Price didn't break down there. 2 equal lows. Okay. You guys see where the money is sitting right now? It's not sitting here because it's been accounted for, right? It's been accounted for. We had equal lows sitting here, okay? Which is why the market came down here, captured those lows, all right? We had highs sitting here, okay? Which is why the market, okay? Which is why the market moved up here and dropped, right? That's a big ass candle for the day, okay? That is a big candle for the day chart, all right? Big candle for the day chart, right? Another big candle for the day chart. You guys may see them as engulfing candles. I see them as institutional candles, as institutional moves, as big money moves, as market moves, as whatever you want to call it. This just means money is behind the move, okay? But money, okay, banks, okay, I said this on the stream last time. Banks, sorry guys, banks, probably just check this whole word up. Nope. Institutional accounts, okay, hedge funds, brokers, okay, market makers, okay, / movers, all right, have to buy to sell, and sell to buy. All right, quickly write that down. I'll leave it up there for a brief second while I talk. All right. But what I mean by buy to sell and sell to buy, all right, guys, is they have to sell the market for an uptrend, right? Because they want the most discounted price that they can get, that the market, or not the market, but that they're willing to take, all right? So they may be at, 1501, sell down to 1500, okay, to move the market up. to 1524. All right. Now, if they do that, they're not closing that sell. Okay, they're still in this sell that's down here. So they want their money back because they're in major drawdown. That's, you know, if they went from 1500 to 1524, that's 240 pips of drawdown. Banks can have that type of drawdown. They can handle that kind of drawdown, okay? Because they have enough money in the account to where their margin will never get called, okay? So if banks are selling here to there to here, okay, it's about 240 pips, right? But they sold it here, right? So what they have to do is come back down to about here, okay? And then they're going to close their orders. And you're going to see the market moon, okay? This is why we get fast reactions in the market, right? This is why we get fake outs. This is why we get everything that happens in the market. It's not because your RSI said it's overbought or oversold or whatever. Buy here, do the happy dance here, do the hokey pokey, turn yourself around. All right? That's not the reason it's saying that, okay? You have to remember, most indicators are lagging indicators, which means they're lagging behind price. This move here was already happening by the time it told you it was oversold. Okay, this move here usually already happened by the time it told you it was overbought. Okay, also, banks know what your indicators are saying. So instead of it actually looking this clean cut, what it's going to do is, oh, wrong one. What it's going to do is it's going to do something like this. Okay. This is where it's going to say it's overbought. Okay. That's where you're entering your sell. Banks are going to do that. Okay. And then that. Okay. You can't tell me, no, that never happens, because it happens all the time, guys. I hear it in my Telegram group, and I hear it in other Telegram groups. Oh, I got stopped out, but it went my way. Okay, because banks know. All right, banks know where our orders are. Banks know what's going on. All right, they have a huge upper hand on us. Okay, huge upper hand. All right, but this is why we look at multiple time frames. All right. So I usually like to start with the day. Sometimes I'll go to the week if the day I can't really read it. All right, I might go to the week, but I usually like to stay with the day. I get a good read of the trend, of momentum, of what's going on the day chart. All right, and I'm starting to tell people this. You know, everybody's told the trend is your friend. Yes, that's true. The trend is your friend, but momentum, that's your best friend. Okay, momentum is your best friend. Okay, so know the trend, yes, but know where momentum is. All right, because look, yes, the trend was going up. All right, but how many of you bought here? Okay, how many of you bought here? Because it was a point of support. It was a point of support, right? Right, this was the last known point of support. You didn't buy here, you bought here. Bought right here because this was a point of support. You had 1, 2, 3 points on the support line. Okay, you can count this one as a support. All right, and you see it blew right through it. Cleared these lows here. Why? Because there's money sitting here. Okay, excuse me guys, 1 second. All right, guys, I'm back. Actually, let me grab me something to drink. Get a little cotton mouth. guys. All right, so here we are. Okay. All right. So we know that we have equal lows here, equal lows here, equal lows here. Well, let's mark it up. Okay. Horizontal ray. Well, what's this? Our buying climax. Oh, I'm sorry. Yeah, this is going to be about the buying climax right here. Okay. Remember, they're not going to look exact. Okay. Not going to look exact as this. Okay. You have to remember that. Here's your up thrust, right? Up thrust, right? Your up thrust right here. Here's your up thrust after distribution. Okay. Here's your buy to sell. Look at that big ass move down. $671 pips, guys. That's a big ass move. Okay, I don't care who you are. That's a big move. All right. But we also have an imbalance here. It's a small one. Okay, it's a small one. But it's there. Okay, at least for now, because this was what I have blacked out is the 23rd to end of the market this week. Okay. All right. So again, we have our money here, which got taken out by this buy to sell. Okay. Now we have these lows that need to be taken out. And then we have these lows that need to be taken out. All right. This is just my opinion, guys. By no means am I a licensed whatever you want to think I am. I'm not. Okay. This is just how I see the market. Something that I've been going over for some months. All right. So let's peel this back a little bit. Okay. Got a couple days here, right? Didn't I tell you guys it comes back up to mitigate, right? To mitigate. Well, let's draw a horizontal line there at the wick there. Guys, okay? Look at this shit. This wick, these two wicks here, okay, the highs of these 2 days, the 24th and the 25th, wicked the low of the buy to sell candle freaking perfectly. That's zero drawdown. Okay? Zero MFN drawdown. You sell here. Okay? Let me see if I can find it really quick. There it is. Okay? Bang. Okay? Snipe that entry. Okay? You snipe the hell out of that entry. Ooh, that is bright as fuck. Ooh, I don't like that yellow that's showing up here. Let's try purple. Okay? You sniped that entry. If you sniped that entry, you had zero drawdown for one. And you caught 300, about 350 pips in 2 freaking days, guys. And you see this was a bull candle. So you probably caught this at the end of the day. Right? Into over to the next session, which went back up, tested it again, which probably created a double top. Okay, which probably created a double top on the lower time frames. But even still, okay, even still, all right, you still could have caught this sell because it shot right here to that buy to sell candle. Okay, or you could have probably played the 50% of this candle. All right, either one. Okay. Boom, 350 pips. For a lot of people, that's a whole week of pips right there that they just got in a day maybe. Okay, in a day. All right, let's peel it back a little bit more. Oh, it dropped. Look at that. And dropped lower. Okay, now I made the mistake on the lower time frames and bought this. All right, on lower time frames, probably I think it was this day. Right, because I didn't read the bigger picture. I just went in really quick, saw something, and reacted. Okay, and that's my fault. I messed up. That's all right. I took the L, and I'll admit that. Okay, I'm cool with that. Right, but going and back testing like this is what helps you understand it better. All right. So again, we had the imbalance, which got filled by this. It tested the low of this candle. Okay. Boom, in it. All right. So I'm looking for bearish movement probably the rest of the year. Why? Because we have equal lows here that now need to be accounted for. All right. Equal lows here that need to be accounted for. Equal lows here that need to be accounted for. Equal lows here that need to be accounted for. Now, is it going to drop to 1382? Man, that's tough to say because of everything that's going on right now. Trade war talks still, war talks still, impeachment talks. All right. And we're coming into the seasons of metals being bought by consumers. Hang on one second, guys. One second, guys. I gotta go see something.
Hey, team, real quick, guys, if you're on and you guys are getting this philosophy of trading like the banks, if you can see how the banks move, can you just drop a 3 in the chat box if it's starting to make sense to you guys so you can understand how the institutions move? So just drop a 3 in the chat box, guys, if it's making sense to you, how the institutions moves and that you can really shift your mindset when you go into the market now. Okay. This is why, guys, that link with the 21 days of growth are 21 videos to gear your mindset and train your eyes to trade like the bank. That's why the 21 days of growth is so critical. You click on that link and there's a video a day that shows you by specific educators on the IM Academy. Guys, we're literally going to be trading like the banks, the big boys. 80% of the world trades the exact same. And this is how we get caught up in the stop losses, the take profits. We look like targets to the market. So what CODI is sharing, guys, is literally how the up north team has been trading. I got a moment to speak with one of the leaders, and this is all they trade. They trade like the banks. And his team has 9 IML educators on his team. So it's crazy. It's right there in the group chat. It should be pinned at the top. It's right at the in the group chat pinned at the top. So I'll drop it in the group chat again real quick. And this is what we watch at our study tables, guys. We watch 8-figure traders train us on trading like the banks. So I just wanted to share that, guys, where CODI stepped away. CODI, are you back?
Yeah, I'm back, dude. I had to go check on my kid. He was crying a little bit. Sorry
no
about
problem.
that.
Is everything okay?
Yeah, everything's good.
Okay.
All right, guys. I'm gonna drop the link in the chat here. You do need an IM Academy subscription to access that link, and like T said, check the Telegram as well for the detailed layout of the 21 days of growth. All right, you can do if it's hard for you to do the 21 days of growth, make it a 30-day of growth. All right, make it 1 month. All right, take this and just focus on this for 1 month. All right, I've been focusing on this for almost 3 months now. All right, and each time I go over it, whether it's teaching it to somebody or watching the educators or on other Zooms with other people talking about this, it clicks more and more, right? And I can start seeing stuff more and more, and I see it differently, and I'm getting more intimate with the strategy itself, the theory itself, okay? The theory itself. All right, so let's get back to it. All right, let's get back to it. So we had our move up, right? Because you guys, we just got out of a major, okay? This right here is a major accumulation zone, okay? That's a big ass, that's a 6-year accumulation zone, all right? For a small little distribution setup like this, okay? But we have some lows that need to be taken out and accounted for, all right? So am I looking for moves lower? Yeah. But at the same time, my bias could still change, right? Right? Because my bias 2 weeks ago was still that it was still going to move up. But you see now my bias has changed because we took out these lows, right? We created a lower low. So now this would be a higher low or lower high, whatever you want to look at it, okay? All right, that's just how I'm reading the market. Maybe reading it wrong, maybe reading it right, right? Everybody interprets a lot of this stuff differently, but a lot of them get the same result, okay? So boom, you can even see that this low here of today, okay, tested this low again. What the hell do you think people did here? Bought. I know a lot of people that bought this, okay? I know a lot of people that bought this. Okay, but again, we have equal lows here, so we have a ton of money sitting down here. Okay, we captured this money, which is why we had the reaction up. Mitigated out of this order here, this buy to sell for the move down. Now I'm looking at some more sell opportunity. Okay, and this little candle here is that quick buy to sell because the big move that happened. Some big banks, some institutions didn't get in right away, so they had to do a quick buy and then sell again. Okay, guys? So we got all of this information just off the day chart. Just off the day chart. Okay? Now, let's remove.
I got a question, Cody.
Go ahead.
So, do you recommend when we go to mark up our charts, should we start on the day and then work our way to the hour?
You know, that depends on the person who's trading. I know people who start on the 4-hour. This is how they start their markup. They start on the 4-hour, they go to the hour, and then they go to the day, or they'll go to the 4-hour to the day to the hour. All right, just depends on how you want to look at it. All right. If you, what I will say, if you cannot get a clear picture, go through time frames until you get that clear picture. Okay. Go through time frames until you get that clear picture. As you see here, the day